Respected CEO sir, directors, Director Training Mehrotra sir, Operations Francis sir, Academics Dr. Muralidharan, our PDC heads who have joined from North Zone, Mr. Basim, and East Zone, Mr. Mahapatra, and our chief guest, Mahapatra sir, alumni members, and dear participants. Good morning, everyone. I'm Ravita Wadhwa, Program Coordinator from IIBF, and I have been joined by alumni participants and alumni executive committee members. And it is a great pleasure for us to see such a good participation in the webinar, which has been arranged by our esteemed program, Advanced Management Program in Banking and Finance alumni. A brief about the program is that this program started in January 2013, and we have completed 11 batches of AMP with 392 successful participants from different banks and financial institutions. This program has been attended by participants from banks, FIs like SBI, Bank of Baroda, Bank of India, Bank of Maharashtra, Canara Bank, Central Bank of India, Indian Overseas Bank, Indian Bank, Punjab National Bank, Punjab and Sindh Bank, Union Bank of India, IDBI Bank, NABARD, RBI, Exim Bank, South Indian Bank, HDFC Bank, Axis Bank, ICICI Bank, J&K Bank, Kotak Mahindra Bank, Barclays Bank, BNP Paribas, DBS Bank, HSBC, Yes Bank, Standard Chartered Bank, Bajaj Finserv, CCIL, NPCI, PNB Housing Finance, Mahindra Finance, Care Ratings, IDFC Bank, Lakshmi Vilas Bank, and small finance banks, Suryodaya Finance Bank, Ujjivan, Equitas, and Northeast. Tamil Nadu Mercantile Bank, TJSB, and even cooperative banks, Saraswat Cooperative Bank, Citizen, and AP State Cooperative Bank have been sending nominations to us on regular basis. We are now presently running the 12th batch of AMP, which is in hybrid mode, and it has two immersion programs. Hybrid in the sense that we have online sessions on weekends, since this is for bank executives, and we have immersion programs, one at IIM Calcutta, which is a residential program, and other at IIBF campus and Mumbai. The program is quite comprehensive and strategic, keeping in view the emerging ideas and trends in banking. The objectives of this program are a sharpening of business skills, understanding of the macroeconomic environment, appreciation of analytical skills, development of soft skills, and importance of ethics in bank. We try to put a specific thrust on financial management, credit management, risk management, and treasury management, so that bankers acquire the skills during the program. We also cover modules on audit and compliance, emerging technologies, strategic management, organizational behavior, and macroeconomics for banking. So this is a brief about the program. Now I hand over the stage to AMP Alumni President, who will be host of the program, Mr. Anvarul Huldak. Sir, welcome, sir.
Thanks, Ravita ma'am. And I heartily welcome our guest speaker, Sri Mrutunjay Mahapatra sir. Sir, welcome again. And I will just give you the brief introduction of our keynote speaker. Good morning, sirs, friends, faculties and staff of IIBF and other dignitaries. I am Anwarul Haq, President of IIBF Alumni Association. It's a great pleasure for me to introduce our today's keynote speaker, Sri Mrutunjay Mahapatra, who is going to talk to us about a very pertinent and relevant topic for everyone, and that is productivity and innovation in the modern world. These two words, productivity and innovation, has acquired tremendous attention and interest in today's world for obvious reasons. As the more innovative is a person or a company is, the most it can drive productivity, but it is not as simple as that. So we are certainly going to have a lot of insights and perspectives about this topic in detail from our esteemed speaker, who has been in top places and at the help of affairs in the area of banking and finance, and has seen it all. He has a world-class vision, and besides being highly customer-centric, he has been very staff-friendly. He believes in futuristic technological innovations and great user experience. He has successfully driven some very critical game-changing IT initiatives like YONO or the largest Bank of India, SBI, being the DMD and CIO of SBI at SBI Global IT Center. Further, while heading and leading Syndicate Bank at a critical juncture, he as MD and CEO transformed the Syndicate Bank by initiating various transformational disruptions in order to inculcate a very positive work culture, instilling and inspiring dynamic and pragmatic leadership at the hierarchical ladder, and putting enthusiasm and pride in branch level functionaries. He has always led by example. Probably there can't be a better and more suitably equipped business leader to speak on the given topic. Presently, he is member of various corporate boards besides being associated with RBI and NABARD in certain associations. Sri Mrutunjay Mahapatra sir is also an author, educator, digital transformation leader, independent consultant and executive mentor. Our speaker, although having spent his entire career in banking, has varied interests. He is a voracious reader, blog writer, avid traveler, YouTuber on interesting and useful topics, and an eminent speaker speaking his mind on various subjects at various forums. I believe that listening to him will be a very beautiful learning experiences to all of us. Without taking any further time, I welcome and respectfully invite Sri Mahapatra sir to speak on the topic. So sir, you are most welcome. And although you have done a lot of assignments and done a lot of things, you are an eminent banker and you speak at different fora, and we have always benefited from your talk. And a lot of things can be said about you, but I have just kept your introduction very brief because many people know you. I am sitting here with my colleague from NABARD. He's all praise for you. And there are so many to whom I talked. They told me that they know you personally. Means they have heard you, see your YouTubes, they have heard your speeches. So I think there is not too much to talk about. And so I would again request you to please start your topic.
Sir, this is my duty to welcome you on behalf of IIBF and particularly on behalf of my CEO, Mr. Vishwaketan Das, who unfortunately could not attend this webinar, though he wanted it too much, and he knows you personally also from the SBI. So he was telling me that I wanted to join, but since he is traveling, he could not get the network and other things. So I am representing him and as well as the IIBF. We extend a warm welcome to you, sir, for this webinar. And this is really our privilege and pleasure to have you with us. You are such an eminent personality, sir. It is very difficult to describe you in words. So as Mr. Anwarul Haq has said, that so much of multi-dimensions are there to your talent and other things. I am 100% sure that my AMP alumni members, actually, they will be largely benefited by your interaction and deliberations. And I'll not take much time. The only thing is that we may trouble you again, sir, when our CEO comes, and for many more occasions, we may actually have your guidance, sir. Thank you very much on behalf of IIBF for joining us and accepting the invitation of our AMP alumni. Thank you, sir.
Thank you. Thank you, Mr. Mehrotra, all the executives who are present in this occasion and who couldn't be present. But, I hold all of you very dear to my heart. Because IIBF, I'm a honorary fellow, and for a long time, I'm associated with it right from the days that I was writing the examination, even after that as an examiner and as a chief examiner, and later on, as from the Board of Studies member. I believe that IIBF is doing outstanding work, and having spent, nearly a decade abroad and traveling extensively as CGM International Banking of SBI, I can tell with a lot of pride that IIBF programs are second to none in the world. And I'm very happy, and I showcase this to the world. And I have told this to Vishwaketan, who is like my younger brother, and of course Mr. Haq, who is an old friend of mine. So please don't take his flourishing introduction too seriously. And I hope that I measure up to that. But thank you for having me here, and thank you for spending a Sunday morning, which is generally a busy morning for all working executives, especially, and for all of us also. So we will try to, I am no one to give you knowledge or gyan, but my aim will be to agitate your mind on a few issues, because in my considered view, my experience and my knowledge, I believe that the styles of leadership, the styles in which we use our knowledge have changed so much that unless in between we take a step back and we gather our thoughts around and reflect a little bit, we will be failing in our duties to ourselves, and of course, much later, to our stakeholders, who could be our family, who could be our society, who could be our professionals. Now, as all of us know, every human being stands on a tripod of effectiveness. Effectiveness is the ultimate measurement on which we decide whether we have met the purpose for which the Creator has created us. And this tripod of effectiveness, which I call personal effectiveness, professional effectiveness, and organizational effectiveness. Now, how do you, whether these are all watertight compartments or they are interactive, or you do not know when you are treading on one while you are touching the other. So this dilemma of being effective in various spheres, as we are cognizant about only one sphere in our minds, is the challenge as well as the beauty of the current day. What we are looking at is understanding things as they evolve. When I joined State Bank of India as a young 21 or 22-year-old, that time, we had a change coming, probably maybe 20-year cycle. And as we will see in course of my presentation, we'll see how ramping up happens at a blinding speed. And this blinding speed enjoins us to keep our eyes, ears open, to keep our intellect open, and to embrace and examine ideas which may be alien, which may be a little foreign, which may be a little uncomfortable, which may be a little beyond the beaten track. But I think the first thing that I want to make clear to my audience this morning is that start being comfortable with uncomfortable. So with this, let me go through the structured presentation, because I want to respect your time. As I was telling, the present state of the world is in such a flux that all of us periodically must step back and understand what is it that is changing. So with this in mind, I want to start with a picture. Just see this picture and find out what you make out of it. The left-hand side of your picture is the intellectual and leadership behavior not very long back. Maybe 15, 20 years back, in a train, and now in a train is your right hand side. So I don't have to explain, all of you know that acquisition of knowledge, application of knowledge, distribution of knowledge, the method and the workflow of leadership behavior, and the way that we decide how we become effective has changed probably irreversibly in the last few years, because the life itself has changed so much into this. And now if merely change of behavior is not the change in life itself, then what we need to look at, let us have a look. What we will do is that innovation in its classical sense, how it has become digital innovation. We will also see that whether innovation is a style, a fashion, a fad, or it is done, by big companies like Amazon or Google, or it has come to hit the ground. And if we do not take cognizance of it, we will be left behind. What are the laws of the digital world, and how we make a sense as to what is a technological hype, and how do we, is there a method of implementing innovation, or innovation is only blue ocean kind of an innovation? How do we manage new talent, and how do we make innovation as a culture? Because as all of you know, there is a famous English saying that culture eats strategy for breakfast. If we don't change culture, whether it is our family, whether it is our society, whether it is our profession, whether it is, we may strategize endlessly, we can spend sleepless nights, but at the end of it, culture will eat all those strategy as its first meal. That is what is told of all industries, and more about the banking industry. Now, when we look at that, I want to take you back to the basics of banking, how it is changing, because most of you are from banking and finance sector. As all of us know, the Chinese started their banking in a formal way, and then it was first made into a structured banking by the Jews, who established majority of the modern global banks that are there, whether you take it JP Morgan, whether you take it Chase Manhattan, or you take it as Goldman Sachs, whatever you consider as a big name, were established by Jews. But how did it all happen? Just for recapitulating, initially banks were created to take deposits and give loans. People had spare money, and some other people wanted money to run their business, or to run what they are telling that enterprise. Now, in such a case, what is required to be done is that somebody with a trust quotient which is high mobilizes the money and takes it to the people who need it, in between make some margin to defray their costs and give a return to this thing. So first thing is that deposit and loans were the first things of banking. Then later on, what happened was that because this created a lot of trust, and banks have started establishing a lot of offices all over the world or all over the ecosystem, they were asked that since you are also in place A and you are also in place B, why don't you take my money and give it to somebody else? That is known as the payment and remittance, which came as one of the major functions probably 400 years back. And because they were again just taking deposits attracting investments, and safekeeping and advising all came with the trust. Now, if we look at what is happening today, banking, there is a famous book. Those of you who want to read it can read it. It is called Bank 4.0 by Brett King. He says that the disruptions in technology that is happening will take us to a state where, because of different factors which we will see, banks will no more be dealing with money alone. If it comes, it comes. But as all of you might have watched by now, it is important to understand that majority of the basic banking functions could be done by the adjacent players. For example, taking deposit and giving a loan, if somebody gives them access to money, it can be done by a telecom store. It can be done by a retail store. Today, if you are looking at Amazon, where they are telling you do Amazon wallet or whatever, or if you are looking at Paytm, or you are looking at UIDAI, what has been disrupted is the basic model of a bank's functions. Now, if we look at this basic function getting disrupted, what remains and cannot be replaced is the trust. If it takes time to build a trust, and by the time that these fringe or adjacent players start building the trust, they will become a bank. So what we are looking at in terms of innovation should not be concentrated on innovating or ensuring higher productivity of deposits, payments, investments, credit, because this is the traditional approach, which I find that this approach itself is less productive. If we spend our time in moving a mountain, knowing very well that what is this mass of the mountain, at the end of 1 month of trying the moving of the mountain, we will be where we were. So the first challenge that I put before all of you is to understand that productivity doesn't lie in attempting to innovate the traditional things. What we are looking is that banks will be the preserve and repository of customers' trust. So what the banks will be doing in future, they will look themselves as repositories, aggregators, and distributors of identity and information. The information that will be created in the ecosystem will be humongous. When we were trying to do a storage sizing, for example, in a large bank, we were thinking of data coming from core banking alone or our transaction banking. But today, everything is intelligent. The car that you are driving is intelligent. The watch that you are wearing is intelligent. The camera that is there in front of your door is intelligent. Your posts that are being made into social media and some analytics running over it is intelligent. So this will create an explosion of information that could be ingested and that could be used in future, and we are not aware as to what could be the uses at this current in time. So what will happen is that there will be a big rush for storing of information, which at the current moment in time we are not sure how to be used. So this identity and information mapping and managing the overload and managing the algorithm of extracting the data, ingesting the data, extracting the data, visualizing the data are all part of the same value chain. And all these, when they work in harmony, ingestion of data and information, because as we know, data when processed becomes information, information when processed becomes insight, and insight when further processed becomes the vision or becomes the strategy. Now, if we are cognizant of this value chain, we are looking at creating experiences. How we innovate so that customer experience drives our productivity. And remember, customers are not just customers who are coming to deposit their money or take a loan from you. Your employees are your customers. Your colleagues are your customers. Your family is your customer. How do you create a better ecosystem of experience using data, experience, and analytics that is available is going to define banking in future. I hope I have triggered some thoughts. Now, where it will go, we cannot but take cognizance of where things are moving. Now, banks will be stores, mind you, going forward. You just imagine in your mind, you are walking in the aisles of a superstore. And a superstore is a platform. Imagine a shopper stop. Is nothing but creating an ambience, creating an experience, creating a standard in which purveyors of service will come to that platform and will sell their goods. So there will be partners with whom you collaborate. You may or may not own any of the content. You may have a deposit product. You may have a mutual fund product. You may have an insurance product. You can have none of them. So when we were creating YONO in SBI, one thing that I learned as as you are walking in the new digital world, as all of you walk your journeys, it is a journey of learning. It is a journey of discarding what you have learned to learn something new. So as banks become stores, what will happen is that things will come. One day I was hosting the chairman and others, where Mr. Chandrasekharan, who is now the Tata Sons chairman, he requested me, why don't you bring your top management and we will show them what is possible. So one example that he gave is etched in my memory. He told that today, if you want to buy a camera, you see how many features it has, whether it has aperture priority, whether it has a shutter priority, whether it has portrait mode, whether it has an evening mode, whether it is an autocorrect mode. But going forward, what he told is, all of you must remember, he told that going forward, you will require a basic box. If you are going to a marriage, from the cloud, you will download marriage photography software. If you are going on wildlife tour, you will download it. And after that, it will be of no use. So going forward, as I told you, what we need to understand is that many of the basic things must be made reusable, must be made modular. They must be delivered with many hops. When we first saw banking sector transforming into front office and full branch computerization, everything was built by the bank. Today, imagine, let us say the innovation, let us say cassette POS. UPI is involved, POS machine manufacturer is involved, the network provider is involved, NPCI is involved, the clearing house is involved, RBI is involved, customers' mobile provider is involved, customers' own mobile device is involved. And like a magic, it appears. So the tech trends so that things will be modularized, things will be largely driven by auto, and our productivity has to shift from traditional thinking to creating new experiences. And many of these experiences will not last for a long time. And we should be prepared that one concept which I always give in my speeches is the concept of technology debt. If you are paid something 100 rupees, you wait till that 100 rupees is recovered before you pay him some more money. Same is true of technology. I have invested in a server 100 crore rupees. So next year, if I go to the board and say that I need to throw away this server, it's more likely in the present scenario that the board will come out with a gun to kill you. But this is going to be the norm going to the future. Without paying the technology debt, we will have to embrace new technology. So these are some of the technology trends that I wanted, and I must manage the time. So how the innovation has happened over the ages are told as first industrial evolution, second industrial evolution, third industrial, and fourth industrial evolution. In the first industrial evolution, men and women who were essentially hunter-gatherers, or they were cultivating the land and were essentially nomads, as those of you who have read Yuval Noah Harari's famous books know, that first step was mechanization. And they found that, when steam evaporates, probably it does. So how do we take steam power and water power into the next one? Second one was the assembly line, in which, for example, Mr. Ford, who was the famous manufacturer of the car range in US, he thought that if things move in a sequence and if the industrial engineering principles are applied, the productivity will improve quite a lot. In the bank today, in most of the banks and most of the NBFCs that I know and I advise, most of the people, they take this assembly line approach. Work is distributed. You put an account opening form, it goes to the processing center, it goes to the maker of the passbook and ATM card, then it goes to the post office, then it goes to, because they believe that if one type of work is there, the basic principle of industrial engineering is that productivity loss is on account of reset time. If you are manufacturing a batch of things, if you try to manufacture another thing, you'll have to take it out, clean the machine, recalibrate it, and start the engine again. So a lot of time is lost. So in addition, for what is recommended is one by one type of job at one place, so that productivity is maximum. Now, from there, what has come is that computerized and automation, which is ruling currently. But what we are looking today is probably the fourth industrial revolution in which artificial intelligence were machines not exactly replacing human intelligence, but substituting, aiding, and collaborating human intelligence will come in a very, very big way. Some of it we will do it. Now, what are the types of different innovation before we go into this? In my mind, again, this is one thing which I learned when I was moving with the Chief Innovation Officer of Infosys. So I will not spend a lot of time. I'll leave this slide with you and this can be circulated. There are three types of innovation. The first one is called incremental innovation. In everything, we try to find a newer way of doing it faster, better, and handling greater volumes. What is productivity? Productivity is output divided by input. And the simple law of productivity is that either you create output which is higher, or you create output with input which is lower, so that the ratio constantly goes up. Now, when we do incremental innovation, what we try to do is that we try to take on a large number of ingredients, and in each of the ingredients, we find ways to improve it. This is day-to-day innovation, sometimes knowingly, sometimes unknowingly. We keep on doing this. Next is platform innovation. Platform innovation is innovation which takes into account a large number of things and puts them into one particular umbrella. Take, for example, payment system getting into ATMs. So ATM was a platform which was created where the distributed branch and customer network was transported into creating a platform on which people can come and play, and new products, new services, new experiences could be dispensed. The third is the disruptive innovation. Disruptive innovation is, ATMs again is a disruptive innovation, because the way that we thought the banks, somebody coming with a check, presenting it in the counter, the customer waiting with a token and his name getting called out, his balance getting verified, and the slip traveling to the cash counter and he's getting cash, was completely disrupted. Payment mechanism, UIDI, is a complete disruption from the clearing system based on mobile. So disruptive or breakthrough innovation, and as compared to that, disruptive innovation are two ends of the same platform. That is, in a well-defined area, if we innovate on the problem, then it is a breakthrough innovation. Whereas in an area in which the area is not well known, but problem is known, and we start doing it, it is called the disruptive innovation. Now, when both these are combined well, we get a sustaining innovation, or which has a business idea, which can scale up, which can be implemented. I take you back, those of you who have studied physics, generally the idea of the physicists come 2 decades or 1 decade before it could be experimented. That a lot of energy is released when an atom splits itself was known good 25 years before the first atom bomb was created. So engineering generally comes with a lag. Idea is ahead. Innovation is a combination of ideas and engineering. Because at the end of it, when I created in SBI something called innovation and quick win, people always thought that, yeah, these are all fashions or fads that will go away. But trust me, all of you, innovation has to be specifically tailored, and all types of innovation, short-term innovation, long-term innovation, value-oriented innovation, research-oriented innovation must exist in your lives as well as in whatever you are doing. Now, I was talking of the scale. Let us look at, this probably some of you might have seen earlier, but at the cost of repetition, let me tell you. 5 crore customer, 50 million customers, how long it took for different industries to gather. As you can see on the left hand top is the airline, which took 68 years. And gradually it started declining, very, very rapidly. And today, for example, a Facebook or a Twitter, or for that matter, the Pinterest and other thing, 5 crore customers could happen within a year. So this is the challenge. And again, I do not want to, these are governed by 2 or 3 important laws, which I leave with you because, time permitting, I would have explained, because in many of my management classes, I explain Moore's law and Metcalfe's law in a whole class, giving examples. Moore's law is the power of exponential growth. Just you can Google it. It is there all over the place. You do not know 2 to the power 2 to the power 2 to the power 2 to the power 2. For example, if it multiplies itself 2 times every year, it will be an unimaginable number. The network effect. This, some of you who are there, who would have seen the recent fraud in the UCO Bank. What happened? In a old world banking, we wouldn't have seen this happening. So this again brings back what I told. If you are engineered, if you are hardwired, if you are, an organization works as what? Organization is a combination of people, process, technology, and governance. Now, how do you orchestrate people, process, technology, and governance so that these are all optimized and these continue to deliver? Because all these are connected today through networking effect. Now, what is networking effect? I was talking about UCO Bank. Somebody learned that in UCO Bank, money gets transferred without it debiting your account. Now, suddenly it went into social media and something which is called social engineering happened. People started messaging with each other that, yes, look, if you have money, then money you send it to me, your account will not be debited. So the power of network, how many times, it must be your experience that how many times you have received WhatsApp forwards in multiple forums. The same thing is, it is like a gossip. When we were young officers, we were in a department called Industrial Finance Department in SBI's corporate center. And it was a large department. There were 25 of us. And we used to say that how much time it takes for a gossip to come back to you. So somebody releases a gossip, it comes back. So this is the Metcalfe's law. And third thing, which is a cruel thing, is that, if you are a winner, you will rapidly ramp up. It is like an election result. When the trends go in a better way, it beats all the predictions. So remember this. This is a management lesson which is true of today's enterprises. Now let us look at 4.0 as we leave the analog world behind, where man-machine collaboration. I was talking to a senior group of officers, CGMs and EDs of RBI. I told them that, look, what will happen is that now men are feeding the machines, and you are able to manipulate the machine's algorithm to provide you analytics. Going forward, many of the results have to be orchestrated as men has to read machines. Today, one of the biggest security challenges are bot-generated code. For example, in SBI, all of you, those of you who are familiar with a little bit of technology, there is a famous cyber attack called DDoS, Distributed Denial of Service. In that, what happens is that some rogue computer generates a genuine looking transaction to hit a set of computers. Because these rogue transactions occupy so much of machine computing capacity, genuine customers cannot get. When you log into SBI website, it will be told that our website is busy. So this denial of service, what we are looking at in the new machine age, is to human beings dealing with machines, not machines dealing with human beings problem. This is one thing that please remember. And I have rephrased it. This is my word. If somebody doesn't agree, then earlier we used to tell that necessity is the mother of invention. Now we must say productivity is the mother of innovation. Because at the end of it, you'll have to prove to your stakeholders that an innovative step is productive by itself. Now, if we look at innovation and productivity, is there a trade-off? Always, in commercial organization like all of us work with or all of us work for, the whole idea is that the cost and benefit. Now, the cost is measured as a productivity. Many times, the slope of future and current is the intersection of innovation and productivity. Making the organization future ready is a benefit which cannot be lost sight of. Leaders at any level, frontline level, middle level, or at the strategic level. At the same time, you cannot be betting on the productivity of the organization endlessly because you are going on innovation. So remember this, cost and benefit. Cost has to be incurred in innovation to make the future organization more productive. The current productivity has to be redefined again and again to lead to that. Now, if we look at, I have again, I have tried to plot this, and I have taken it from one of the famous research organization. 1997 to 2017 data shows that where exactly innovation is happening. And my own reading, my own research for for speaking in assignments and writing article is that BFSI, media electronics are at the top of innovation sector. So we being there, we should be quickly embracing innovation in order to neutralize at least part of the productivity and inflation challenge. Now, what are the areas in which Indian innovations are happening? I have mentioned about data volumes and analytics. We are looking at the network effect that is coming because models like Netflix, Facebook, Twitter, and Google have told us what is the possibility. One important thing that is happening is that women and millennials, by sheer DNA, by sheer biology, by sheer approach, are redefining the way that innovation and productivity can be done. We know the famous theory X and theory Y, where, the male model of dominance, or, the personality types, the alpha males trying to dominate or managing the unions are important. So these are, expanding to different areas. And what we are looking today is ambient regulation and government policy. Ambient, as you know, is favorable, pleasurable, or, you say that, 23 degrees Celsius in the AC is an ambient temperature. 18 degrees cold and 25 degrees hot. So today, regulation and government, in fact, as I sit in large number of committees of the government and policy, none, zero, is holding back on innovation. In fact, everyone is trying to promote innovation, facilitate innovation, subsidize innovation. So banks also have to go there. Now, the power loss, as I told, I will not spend a lot of time, but I will spend a little bit of time on power of virtuous cycles. Virtuous cycle is, as all of you know, reading it clockwise is a virtuous cycle, reading it anti-clockwise is a vicious cycle. So what we are looking at is that whether chicken is first or egg is first. Nobody has solved the dilemma, but today the leaders and in our organization, whether, many times the classical managers will tell, pehle to ye whatever investment we have made, pehle let it stabilize, then we'll go for the next. But that traditional approach is giving way to a virtuous cycle where constantly you will have to put money into research, in technological advances, so that the productivity rises. And when demand increases, you cannot, in industry, those of us who have worked in large industrial finance, and I am one who watches the industry, typically new capacity is planned when the old capacity is utilized to the level of 60 to 70% in order to take care of the new demand that might come. But how about a new product? How about a new demand for a new product which your existing machinery cannot handle? That is where you need to shift to virtuous cycles, where you will have to think laterally, where you will have to think incrementally only for sustaining your bread and butter, but think digitally, think what we used to, again, giving an example of physics, because physics was my subject, we used to have classical mechanics and quantum mechanics. Classical mechanics is everything incremental, everything is known. Quantum mechanics is that possibility where probably an aircraft hits a hill, but there is some chance that it will emerge from the other side. So we need to think in a quantum manner rather than always on a classical manner. This is also another economic dilemma or dichotomy which we need to, because we are told there is a diminishing value of utility. You create something, there will be a hype, and gradually it will go increasing. But in case of a platform business, because the average cost and the autonomous mode of running kicks in clearly. And after that, the cost becomes so minuscule that whether it is digital platform or any other platform, in banks, we should try to aggregate all the disparate and diversified offerings into platforms. Now, if we go forward, the virtuous cycle, as I told you, begins with data and ends with data. Today, majority of the people, they struggle that whether they go clockwise or they go anti-clockwise. If you do not have better data, people will not be willing to share more data with you. You cannot have better customer engagement. You cannot have better products. You cannot have faster speed. So we need to, at leadership level or at supervisory level or at any level, everybody is a leader in their own space. How can we trigger and facilitate data where, customer experience is created with a lower cost structure, lower prices, giving customer experience? Initially, it was thought that this is not possible. Everything that gives a better experience had to cost more money. But today, things have completely changed. Now, what are the different technology hypes? Let me tell you in little detail. Now, if we look at all technology go through this cycle, which is called the hype cycle. At the bottom left-hand side is known as the innovation trigger. There is a demand, there is a felt need, there is a gap, so there is a trigger of innovation. Now, this innovation, once it is unleashed, there is a lot of expectation that moon will be delivered, cloud is the limit, sky is the limit. So the top that you see, which is in the form of inverted V, is known as peak of expectation or inflated expectation. So innovation trigger goes to a peak of inflated expectation. As is only expected in a rational being, it is not delivered. So people start bad-mouthing it, any initiative, whether it is technology or anything. They will start bad-mouthing it, criticizing it. Then it is called the trough of disillusionment, which is the bottom. Then, as you see on the right-hand side, what happens is that people lower their expectation. There is more provision by the service provider or the institution. That phase where there is a slow rise as compared to the inverted V, as you can see, it is slightly raised L. That is called the slope of enlightenment. And in the slope of enlightenment, lot of corrections happens, after which only there is a plateau of productivity. Plateau of productivity is where a platform has stabilized, an innovation has stabilized, innovation has scaled, the initial teething problems have been taken down, and we go into real productivity. Now, this is inevitable in innovation as well as in any project. Our challenge as contributors is to compress this. What is written on the x-axis as time, we cannot probably compress the y-axis, which is expectation. But x-axis we can definitely compress by leadership interventions and by proper planning. Now, if we look at this dilemma, which is business-driven solution versus IT solution, today it is again very collaborative. How we have conceptual clarity as to we will be doing things and we will be solutioning things. And from a teaching, and the cartoon is that which says that probably few years back, the business was looking for a telephone. Now it is looking for a website. More than that, I read into it that father and son probably are collaborating more in finding solutions. Now, how do we, there was large number of requests. In fact, I received 6-7 requests saying that how do I innovate? So innovation has 2 or 3 things. Your organization's capability to accept and implement change. What are the changes that are required? And who are the people who can help you in that? Because innovation requires a certain mindset, ability to withstand failure, and temporary loss of productivity. So this need to be kept in mind, and without that clarity, we cannot go much further. So how do we go into it? As I told sometime before, starting small is the best way of doing it. Then cross-functional, because today banks are learning from manufacturing industry. Manufacturing industry is learning from media. Media is learning from politics. So this cross-functional learning is the womb or the creation of innovative ideas. As we have taken assembly line and have done into centralized processing in banks, essentially, initially it was an industrial concept. Third, of course, is you should have the capability to make it iterative, create the documents, have a small group, and find out what can be done. And even after this, everything could fail, but we need to go and try it out. So this is the template that I have given, and I will leave it with you. Essentially, that is the area in which now there are a few parting thoughts that I want to give you. One is the traditional way of measuring talent. We always used to think that, very high performers and very low performers are only 5% each. Rest are all average performers. Now there is a concept in the new world of measuring productivity by identifying hyper performers. There will be hyper performers, high performers, and there will be a long tail of lower performers. We need to identify. Now tools are available, or you can do it on your own. One is that reskilling, upskilling is there, and another thing that I did successfully at both the banks where I had some power to influence, both in SBI as well as Syndicate Bank, is creating entrepreneurs, giving them innovation space so that they can come up with ideas. Next important thing is understanding. Some of you may be millennials, but I want to tell you that going forward, this mindset is completely different. We need to be totally in a different mindset to lead them. And many of them, at the age of 30, some of them are leaving jobs because they believe that they are not creating enough impact. And true to the millennial mindset, many of the innovations in today's world were created by people who are in the range of 28 to 35. Only about 10 to 15% of the total things have been created by people who have crossed their 50th year or something like that. Although I believe the creative juices can still flow, but we must understand that need for impact is the mother trigger for innovation. In any of the teams that you form for innovation, you need to recognize and catalyze your millennial workforce aspiration to make an impact. And many times, of course, Mr. Narayan Murthy included, Infosys and others are bringing people back to workspace. But flexibility is something which has come from the COVID. And that flexibility has given rise to a lot of technologies like the one that we are using, where through remote control and through deploying watch and surveillance software, you can pretty much achieve whatever you are trying to do. The new generation also wants transparency. They don't want to listen to simply because you are a father or you are the boss. Everything must be predictable. Everything must happen to a rule. And they don't know that there was something called a physical world. They want to be quickly recognized. And some of these experiments we tried also in various places. And it must be individualized rather than customized. Now, innovation as a culture, it needs to be different things. And I have covered most of it, so I will not spend this thing. Some of the things that I have used all my life, and right now I advise boards, is that to create these things, idea contest. Second is tinker time, something which is working well, but you need to tinker with it. Don't believe that things will change just because we leave it till it is broken. Third thing is that external consultants are a much hated community, but from my experience, they also bring in ideas. Mining of social media for new ideas is very important. And communication, camaraderie, that is friendship, being equals. If you are a leader, how do you communicate? How do you become a cheerleader? And communication, camaraderie, and cheerleading are very, very important. Innovation need not always be very, very expensive. There could be frugal innovation, that is innovation at a very low cost. But only thing is that there are hidden costs. Many times the frugal innovations fail faster as compared to a well-orchestrated innovation, which takes time to stabilize and which gives result a little later. So some of the things that I have given here, innovation is something which we need to embrace, which we need to do through small, meaningful changes. And our aim should be to aim at changing the culture and ecosystem simultaneously as we innovate. So this is what I wanted to tell all of you. I think, because of the technology thing, otherwise I promised that I will try to finish in 50 minutes time. And if there are any questions that has been gathered, I'll be happy to answer. Thank you.
Actually, we had several thought-provoking insights and perspectives, and we were listening very intently whatever you said. It has forced us to think in a different manner and think differently. Most of us are eager to imbibe these things, and we will definitely think on these lines. And it was an eye-opener also that there can be many aspects or many perspectives of one issue or one topic. So we are really very thankful to you, sir. We have received a few questions from our participants. Because of paucity of time, I will just read one by one, and sir will request you to give your thought. AI is being deployed and used in a big way everywhere, including banks. What may be the impact of artificial intelligence on banks and its workforce?
Okay, it is a good question, but a few days back I was addressing a Economic Times conclave on artificial intelligence. What artificial intelligence can do is unlimited, definitely, but artificial intelligence depends on a lot of data. And today, data can be classified into two parts: clean data and dirty data. Dirty data is not that it is contaminated or anything. Dirty data is one which is not sanitized. which cannot be used for all applications beyond simple applications. But AI, why an autonomous vehicle project has not succeeded so far? Because if you, after your own life, you value your money. So when you are trusting someone, then what will happen is that unless it is absolutely kosher, unless it is absolutely sure that this can be used, the banking sector usage of AI will remain, in my view, at least for the next 2 or 3 years, limited to being a power to the elbow of the banker. For credit appraisal, you may take an artificial intelligence for default prediction. For rolling at an IT, you can do system integration testing using AI. For treasury management, you can find AI for doing recommendation. For somebody who is coming to your platform, you can use AI to build a recommendation engine. But end-to-end replacement is, I think, quite far away. So to sum up, AI is the technology of the future. But before that, all of us must invest in making our data much more robust. So that is my thought.
Thanks, sir. Another participant has asked a question, sir. Whether fintech will be more powerful and compete with banks in a more aggressive way?
Again, a very relevant question. What is fintech? Fintech is financial technology. So the fintech, they have the power of idea, which we also have, and I have experienced in my own life. But our thing is that we are stuck in the bureaucracy of process and understanding and getting approvals, etc. Whereas the fintech is nimble on their foot, and they can experiment, they can fail, and they can move on. So I believe fintechs will not replace, but increasingly, as I'm seeing, I'm advocating and I'm also advising that fintech and banks must coexist in a peaceful manner, and banks must take advantage of fintech in getting ideas and taking ideas into action, as much as fintechs must take help of the banks in utilizing the trust, utilizing the scalability, and getting the data to experiment and make products and services more robust.
Thanks, sir. One question is, sir, lots of negativity in behavior and a certain cultural depravity is now ever pervasive in banking industry. What could be the reason and solutions? Because this is afflicting many bankers these days. The change of culture and environment in banking industry. Insight.
What is happening is that in, again, my perspective, because I touch many banks, what is happening is that the period of privatization has given an end goal without understanding the process. Now, if a machine is made to function to a particular rating and particular capacity, if you exercise it too much, then probably the machine will get repair. Machine will require repair and recalibration. Today, the cultural things, as you were telling, probably you are referring to the immense pressure of achieving target and disturbance in the work-life balance and the humaneness of approach giving way to the commercialness and other things. I believe this is a temporary phase. Everything must recoil back, but my individual advice is that stand firm, and wherever somebody is encroaching on your privacy, on your human value, on your dignity, please give it back in whatever polite way that is possible without being aggressive. No, I think this is a state of adjustment that is happening in the new culture coming into a lazy and so-called idle world of banking and finance. So this I believe will be temporary, and we will see a stabilized phase very soon.
Sir, one of friends from NABARD, he has asked a question. In an age of too much data, misinformation, half knowledge, how to achieve wisdom, especially when your thought is influenced by external force?
Oh, I wish I had known this. No, it is really a difficult thing. So you need to, because the so-called word WhatsApp University has not just come just like that, because it is so easy in a world of social media to spread misinformation, unresearched information. So if you are deciding on something which you must have two or three which I use. One is that life changing and strategic decision, where I do fact check and I do my own research. Second is day to day, where I do a mixture of taking something which has come. And third is entertainment value. The entertainment value, yeah, if you can enjoy WhatsApp forward without checking into the veracity and the authenticity, why should you do heavy lifting of doing a lot of research and a lot of checking? So I think we are in for living in a hybrid world, and this data being of different shapes, sizes, and characters is a given thing. Many times these will come in a very intrusive and very disturbing kind of shape, but we must learn how to do this without hurting ourselves, because at the end of it, I believe that the first casualty of bad data, bad information is your own self. So you must take care of preventing it. Draw your own lines, which will keep on changing, but draw them nevertheless.
Thanks, sir. One last question, sir. Going forward, biggest challenge for banks?
Biggest challenge for bank will be continuously creating experiences, and knowing very well that 90% of their experiments on experiences will fail. That will be the biggest challenge.
Thanks, sir. Thanks a lot, sir. Now I would request my friend Mr. K. Badri to extend. Thanks.
So good afternoon, sir. It's always wonderful to listen you. I had the experience previously also, sir, sitting in law department of NABARD. So on behalf of the IIBF Alumni Association, sir, I thank you very much for the journey. I don't say it's a lecture, sir, for a journey we had for the last 1.5 hours or so. You could take us to the various aspects of innovation, the productivity, the incremental innovation, how to remain relevant to the system, especially when we are dealing with the millennium. So the new breed of people who we feel they have the less patience and we have more patience. But anyway, so the cultural shock which is happening between generations, that is also one thing which we need to look into. Thank you very much for taking us all through this journey, sir. It's always wonderful to listen to you, sir. I had the privilege of listening to you all through.
Thank you, Badri. I hope all is well with you.
Fine, sir. Fine. Thank you very much, sir. And I also thank IIBF for providing the platform. And it is a first of the programs, and we wish to see many more programs of you and through you also, sir. And I also thank all the participants who are about 80 or so, sir. It's a good participation, keeping in view the Sunday morning. So it's a wonderful, and in Bombay, sir, and in Bombay. So keeping all these things in mind, sir, it was a wonderful participation. We are all enlightened by your presentation, the way you make the things, the complex things so simpler, sir. That is the hallmark of Mrutunjay Mahapatra ji. And so I hope we are all enlightened by your thing. And I wish to thank everybody, Pratchaksh and Paroksh, who made this program successful and without whose cooperation this work or this program could not have been possible. Thank you very much, sir.
Thank you, Mahapatra sir. On behalf of IIBF, for delivering a very, very thought-provoking lecture today. And a lot of insights actually you have given us and to our AMP alumni participants. My special thanks to Mr. Anwarul Haq ji for organizing and roping you for this purpose. So thanks a lot, and we will be seeing you again, sir, on some other occasion. Thank you very much, sir.
Thank you. God bless all of you. Thank you.
Thank you, sir. Thank you so much, sir.
Thanks a lot.
Thanks.